You ever thought of having the ability to borrow money to invest and make a decent profit on that return? That's exactly what we're going to be looking at today, guys, as we start our debt-free journey and looking at what we can borrow to invest. And it is going to keep me on track. It is going to keep me on goal. So I'm going to show you my thoughts and exactly how we're going to do this. That way we have a lot more to invest and also repaying what we are borrowing, again, to really go into that investment vehicle. Now, for all of this, we are going to be using M1 Finance. It is my preferred method that we do all of our investing because they have commission-free trades. There are links right down below if you do want to join M1. And if you do want to start this challenge, you can actually do it on any amount that you're putting in here, guys, to actually get started with your account. But automating the investment is really probably one of the biggest things that people overlook, is having the ability to put 10, 15, 25, 50, $100, whatever it may be, aside every week, every 2 weeks, once a month. Again, whatever it is that you can afford in the budget, but having the ability to pay yourself first is going to be very important, guys, to really creating wealth and creating long-term wealth. Now, I am not a financial advisor and I do not advise anyone to do this. Let me know in the comments what you guys think about the plan of action once we get through this video. And if you like the content that I'm putting out there, definitely consider subscribing to the channel. So we're going to hop over, guys, and we're going to check out M1. So looking here, guys, this is our debt-free journey account. As you can see, the current value is around 70,000. So this is going to be our starting point. And this is going to be week number 1 overall to start building this. Now, again, what we're doing is we are using the investment portfolio, which I'll show you in just a minute, in conjunction with our borrowing tab, which is actually right up here, allowing us to go through and borrow or leverage the investment that we have. But there is a cost to it. So we have to see where the return is. So currently where we're at 69, so just south of $70,000. You can see we've gained about $5,000 since we have opened this on September 27th. So we're looking at 2 years, which we know 2022 was a year that was very difficult when it comes to the investment. And 2023 so far has been pretty good, but through dollar cost averaging, which is exactly what we're going to be using, we're going to be investing $1,000 every Monday morning. That way we can build up this portfolio. Now, during that same period, guys, I'm going to be using funds earned from my job, from YouTube, the revenue from streaming. I have a gaming channel as well. And we're going to take that and we're going to pay down the borrowing tab to see exactly where we can get. Eventually, we're going to get to some leveraged dollars that we're going to have. And the borrowing tab, we want to keep probably about 10 to 20,000 in there. That way we can really put it in the market and hopefully see a pretty decent return through dollar cost averaging over the next probably year, depending on how fast we really go through that $1,000 a week and seeing exactly where we can build this. Now, the portfolio that we're working with is a combination, guys, of right here. You can see through buying and selling, it's actually changed quite a bit. And also the ratios that we're kind of building at as we continue to put more money in this. It goes into the SCHD, QQQM, and the VUG, the Vanguard Growth Fund. These are the 4 that I'm buying, and these are the 4 that I'm running at 25% each one, which means through contributions, guys, we are going to get all of these into that 25%. And as I do more contributions to this, you will see the percentages even out. So we will not have money going into the VOO. It will be going into these second 3 to essentially catch them up to that 25%. We did the initial investment in here over the last couple weeks. So you can see we have about 1,000 in each of these. Now, with that being said, the VOO, or the Vanguard S&P 500, and all of these are ETFs, guys. It is really what I truly believe in that you're going to be building wealth out of, is the ETFs, because I'm not investing in specific stocks. I am investing in pools of ETFs. So there's actually, I believe it was like 533 stocks within the VOO, which make up the S&P 500. So this is kind of, it's kind of based on the S&P 500 and the largest companies within there. Now, the Schwab US dividend equity, I believe this one chooses 100 companies that have paid, and they have certain speculations or certain parameters when you go through here that have paid dividends for so many years, have increased their dividends by a certain amount. Now, I did a video a little while ago about the SCHD, which you can definitely check out, but it is one of the funds for the dividend yield. Now, of course, when you look at volatility, when you look at kind of going back and forth, where you might have like a growth fund that doesn't grow as much or grows a lot, dividends in dividend ETFs usually stay a little bit of growth. We don't see as much growth out of those because they are giving more of a dividend yield. Now, the QQQM is very similar. It is actually one of the very similar funds to the QQQ. However, the M has a lower cost. All of these funds for the ETFs do have a low cost. Now, the QQQM, of course, is following the NASDAQ 100, where the VOO is the S&P 500. So again, getting a little bit more exposure into the tech side of it and a lot more of the AI kind of verse that is going on over there. And then, of course, we have the VUG, which is just a straight up growth fund. And you can look, guys, as I've kind of went into some positions and gotten out of those, so far what we have for our return is roughly 36% is the VUG. We have the VOO at 22, and then of course 2%, like I said, with the SCHD, the Schwab US dividend equity. We don't see as much gain or return out of that. A lot of it comes in the form of dividends, which I've only gotten dividends, I believe, once so far with holding this. And then of course the QQQM, we've seen a 7%. So overall, a pretty decent yield to the amount that we have gotten. And again, you can see some of these returns are off a little bit just for the simple fact of buying and selling or holding at different times that we have in the last 2 years. So this is going to be the basis. And again, every single week, we are going to be putting $1,000 into this, and we're going to be doing it through the borrowing function that we have right here. So this morning I did borrow 1,000. We put it into the market. I'm hoping to get a return. Now, the big thing to note here and why I do not recommend this for a lot of people is, one, there is a big risk associated with it. As you can see right here, the base rate of this to borrow money is 7.25, which means what we're investing, we have to get a better rate than this. And where we're running right now around 12%, we'll have to see what the rest of this year. So if I'm making 12%, it's costing me 7. We're going to be roughly making 5% on that. Now, the very cautious, and the reason I say that, guys, is because if you're investing and you do have a down year, not only is it going to be down based on whatever percentage you are down in the different funds, but in addition, you're going to be paying the 7.25 on what you have borrowed, which again, could put you in a really bad position. And of course, with the credit limit, you can see we're using 3.6% of the credit limit. The credit limit rate here based on our portfolio size is $27,800, again, based on what we have in that investment account. But like I had said earlier, what we're going to do though is as we're borrowing money in here every week, since I do zero-based budgeting, anything that we have left at the end of the month, it is actually going to go back into the debt repayment. So instead of putting it right into the market when I do have funds available, like I have been for a considerable amount of time, this is going to allow me to dollar cost average every single week. And it is going to allow me to borrow the funds, even if I do not have them available, depending on the payroll cycles, depending on what is coming on from YouTube, and where we're getting through all the other forms of the side gigs and everything else. So it's going to be interesting to see. And again, I want to really caution you guys, borrowing on leverage, there's a lot of things, even borrowing on margin right here. It shows you, exactly what you can do, but it also says before you do this, it goes through kind of what it is and what it could look like and how it could be detrimental to a portfolio. Because essentially, if it gets to a point where I no longer have credit available, which 98% is what we do have available, so we are still in the great ratio, they can actually liquidate your position within your investment to repay and pay off the debt that you have here. So essentially, if the investment portfolio goes down, let's say 50%, the borrowing is going to go down 50% as well. If I am over borrowed on here with a portfolio drop of 50%, they're going to go ahead and liquidate the investments to repay what we're borrowing here, just because they don't want to lose money that we're borrowing on margin. So with it being 7.25, again, that's a pretty high rate. This used to be about 3%, but we know as rates have went up and it has funds, the cost of funds have really went up. I want to go ahead and leverage this now to invest it. And again, I want to see exactly what we're going to get and what this return is going to look like over a considerable amount of time. So I'm thinking even if we have $20,000, $1,000 a week, that is going to cover 20 weeks with the repayment. We could probably do this for 30 or 40 weeks based on the repayment, because looking at our funding history, guys, we've put around 38K into this year alone, 25, and out of the 38 that we put there, we can probably put a considerable amount more in there. Again, based on the zero-based budgeting, based on savings, and what we're generating from YouTube income. So as this channel grows, as it gets monetized, it is going to give us the ability to actually beef this up a little bit more, because this is kind of the discretionary spending as we get ready and planning for retirement in the next couple years. It is absolutely what we're looking to do to build this to 2, 3, 400,000, and then also give it a couple years to really compound in here in a portfolio based on borrowing some of it on leverage and repaying the debt as we do get it. So, all right, guys. So looking at this, I'm going to be tracking it. I actually have an Excel spreadsheet, and you can see right here, guys, we have all of our trading dates. We have the deposits that we're going to put in here. And then I'm going to kind of earmark the return, where we are for the cash flow, the market gain for where we're at, dividends that we have accumulated, and exactly where this balance is. So we can track the difference again, kind of through time on a week-to-week basis. So again, if you want to follow the journey through this, absolutely, guys, go ahead and subscribe to the channel now, because here we have our 4 portfolio. Again, we have the VOO, the QQQM, the VUG, and the SCHD. Those are the ones that we're going to be focused on. Now, as you look, I did post the gains in there. I did not post the price, because I'm trying not to literally track everything that we have here, but as the gains vary, as they go up and down, depending on which way the portfolio kind of fluctuates, I thought of doing percentages. So let me know in the comments if you think it should be in the dollars like I have right now. I have the actual dollars that we did, that we have seen it go up. So actually using these numbers, which are right in the dollar values, we could do the percentage values. We could do this a couple different ways. And again, I based it on the starting point when we invested that first $1,000. So we could take a look at it and we can track it. So what I do is I put the buy in usually Sunday or Monday morning. Through M1 Finance, it is executed, I believe, 9:30 when the market opens on Monday morning. So I did some research, and they said the best day to invest in the stock market is Monday mornings. Traditionally, the best time to sell is Fridays. So again, we're going to be doing this on every Monday morning. As you can see, I put in some dates for the rest of 2023, then getting into 2024, so we can actually continue the investment journey. And I'm also going to note in here, guys, is when we're doing the repayment. So again, thinking about borrowing every single week, at what point, probably around the 10,000 mark, maybe a little bit higher, we'll stop the borrowing and we'll just go kind of into more of a repayment phase as we continue to build this. But we're talking weeks or probably even months at this point, just kind of based on how much we put in there. So if you look, if we put in 38,000, that's 38 months that we could cover borrowing it just without leveraging anything. Add another 20,000 on there, we're at what, 30, 40, 58 months, or excuse me, 58 weeks, which means that we would be enough to cover over a year just based on the deposits that we have, which is really cool to think. And again, leveraging it, if we can get some solid growth within these 3 funds, it's going to be very interesting to see where it goes and how much we end up, especially with repaying, again, what we're borrowing. So, all right, guys, so that'll do it for today's video. Let me know in the comments what you guys think about the whole plan to do it. And as always, thank you guys for watching.